Why invest in REITs to gain exposure to US real estate?
We think there are three main reasons to invest in REITs to gain exposure to U.S. commercial real estate. First is diversity. If you own a REIT or a REIT fund, you have exposure to many different properties, and you are diversified both by property type and region of the United States. So with buying one REIT fund, you can gain exposure to a broad range of real estate within the United States. Additionally, the REIT structure is a very liquid structure. So as an investor or a manager, you can buy or sell interest in U.S. commercial real estate in a very efficient and expeditious manner. The third reason we think REITs make a lot of sense as a way to invest in U.S. real estate is that, in our opinion, REIT portfolios are of higher quality than typical U.S. commercial real estate holdings, and the management teams at REITs are above average in terms of how they've been able to grow and increase their real estate portfolios over the years.
What about the valuations of this sector?
We think valuations are still attractive. While it's true that values on a cash flow multiple basis or relative to net asset value are slightly above long-term averages, we think that those valuations are justified because we see a number of years of above average cash flow growth for commercial REITs in the U.S. One reason we think above average cash flow growth is likely is that there is very little new construction of commercial real estate occurring in the U.S. today, which means that the owners of existing real estate assets in the U.S. have the ability to improve occupancies and increase rental rates over the next few years. So we think that the slightly above average valuations are more than accounted for in the above average cash flow growth that will likely transpire over the next few years.
Where do you see the best opportunities in the US REITs space?
One area where we see very good opportunities is within the rental apartment space. There are a few reasons that we expect rental apartment REITs to generate better cash flow growth and potentially better returns versus other sectors. One reason is that it is still very difficult to qualify for a mortgage in the United States. So many U.S. consumers are choosing to rent apartments as opposed to buying condominiums or buying single-family homes. Additionally, the echo boom generation in the United States, so these are the children of the baby boom generation, are in their late 20s now, and that's a prime age for renting an apartment. So we think the apartment market is an area that should show above average cash flow growth over the next few years.
How about the dividend yields prospects of the REITs sector?
Currently, the U.S. REITs on average have about a 3.5% common dividend yield, and this compares to S&P 500 securities yielding about 2%, and the 10-year U.S. Treasury yielding around 2% as well. So when we think about the 3.5% dividend yield, we think it remains attractive versus other potential equity or equity income securities. And additionally, when we see the cash flow growth come through for REITs, and we're anticipating roughly 8 to 10% cash flow growth in 2013, that translates into higher dividends because REITs are required to pay out 90% of taxable net income in the form of dividends. So as the cash flow growth comes through, that will translate into higher dividends for investors as well.